traders from across the globe, and welcome to the 1436th installment of these educational videos. These videos are geared to teach you the art of technical analysis. Remember, the art of technical analysis, because there is no sure thing when it comes to technical analysis. It is an art, not a science, but it's a pretty darn good art and the best roadmap I have ever seen on most occasions to calling the market correctly going forward the next day. Now, I stood in front of you. I shouldn't say I actually stood in front of you because it was a shoot where I just filmed my screen. However, in my last video, I came out and said, listen, I don't think the market has a chance to go through or go up because I'm not sure that we're going to hold that double bottom that the Dow put in. And why? Was because the Dow is a follower of other markets, and the leaders that lead the Dow around had gone through what could have been a double bottom and continued down. So the Dow puts in what could have been a double bottom all by itself, and I came out with some evidence to state, well, if the leaders didn't stop at the double bottom, why should the Dow? Well, it did, and I was completely wrong in my last video. I said I didn't think it would stop and it would continue to drop, and it did not. It went straight up for the last 3 days. Now, thank the Lord, because I started talking about this the day before the holiday. I didn't bother to put out any OMNI and we didn't get involved. So even though we thought it would go down, we weren't in the market. Thank the Lord, it didn't cost us to have the wrong opinion. So thank you for the holiday. Back to trading. Going forward for trading on the 18th. This video is coming to you on the 17th of Feb for trading on the 18th. That's Thursday, 2016. So yes, I was absolutely wrong in my last video. Crude went up too. Both were wrong, both calls. But let me explain something right now. Whether you think so or not, you will see it in the charts. Markets are not out of the woods just yet. We are cautious. Very cautious buyers of dips, but we're starting off the day with a green Omni for trading on Thursday. Even the S&P, NASDAQ, Russell, the usual suspects. We will buy the dips, but I am going to show you in just a moment that you got to be careful. Yes, we're buying dips, but we're not quite out of the woods yet technically. Traders, I also mentioned to you that even if the markets did stop and hold at what's now considered a double bottom, it would have nothing to do with Elliott wave theory, which is nonsense, tail-chasing nonsense, and it would turn out to have just been a double bottom if, in fact, it holds the double bottom. But it would have nothing to do with Elliott wave, and that Elliott wave doesn't work, and I would explain that to you in my next video. And that's what I told you in my last video. So here we are, the next video, my explanation. Traders, I spent many years studying Elliott wave. I kid you not. I am a student of this industry, of this business, of all types of technical analysis. For years, I studied Elliott's theory. Ralph Nelson Elliott is his name, if you didn't know that. And let me tell you right now, the Elliott wave theory is not just counting waves. It is combined with the proper Fibonacci counts. You've got to count Fibonacci correctly. You've got to count the waves correctly. And here's why that's impossible. If you want to convince me that Elliott wave is correct and that you have got the proper Elliott wave count, then this has to happen. One, you've got to go all the way back about 150 years. You've got to get exact data. Exact data. We had no computers back then. We don't know if the records are correct. You don't know if you get them, if that is correct. There is no way you've got correct data going back for 150 years. But if you did, then you'd have to take that correct data and you would have to do an exact Elliott wave count with the ABCs, with the zigzags, with the 1, 2, 3s. Did you count the waves right? Did you start 150 years ago? Get every single count correct right up until today? Then and you can tell me what the count is, and it might actually work. Do you understand? It is impossible to get the right count. It is impossible to have the proper data. And even if you did, nobody can count these waves correctly for 150 years to get us to today because it's too subjective. Is it wave 1, wave 2, wave 3? Is it a zigzag of wave 1? Is it actually a 1, 2, 3 of wave 1, which shows you the 3-wave pullback before wave 2 goes? You can go on with this forever. It doesn't work. I kid you not. It is total tail chasing. So, if you Elliott wave theorists who basically been calling the top since it went down to 666, then you started getting bearish, and while we were down there, you stayed bearish. You guys know nothing when it comes to these counts. Why? Because no matter who taught you how to count the waves, you can't possibly have the correct data, step one. And there is no one that's ever been able to count for 150 plus years, get the count right, and prove it to the rest of us. I am done speaking about this nonsense. Elliott wave theory is way too subjective. It can't possibly work. End of story. Let's move forward. What does work, usually quite well, is our Omni. It is starting off the day as a buyer of dips in the emini S&P. I don't know for sure we will continue buying dips by the end of the day, but that's how the day starts. I'm about to show you some charts now. In these charts, you should see that, yes, the markets are moving up, but no, we're not out of the woods just yet, so you need to be a very cautious buyer of dips. Traders, with no further ado, let's go look at some charts. Okay, traders, in my last video, the one right before this one, I showed you this chart, Dow Jones Industrial Average Daily Bar Chart. And I stated in that chart that we likely would not hold this as a double bottom. You bounce for a day, but look at this channel. You see these blue lines? You're in this sort of a channel. I don't know that we're going to be able to break through the top of the channel. Besides that, if you note this average, when we hit the average, we fall back down, hit the average, fall back down. We're hitting the average again. So likely, I don't think this will turn out to be a double bottom, and that's what I told you. And this is where it was. And I was wrong, and it went up through the average and past this channel at the moment. It's right here. So it was challenging this area. It went right through it. What can I tell you? That analysis did not work. On to the next one. Here is one of the reasons why I explained why it should not work. You were looking at a follower. Now you're looking at the leader, the Dow Jones Transportation Average. That is a crystal clear bear flag. The last bear flag worked, which is this one right here. And many of the bear flags that we see on this chart work out really well. This is another bear flag, and I said if the leader, which has no double bottom right here, right, went right through what could have been a double bottom, is now in a bear flag, we should follow that leader and not expect the market to break out. That was sound logic, but this is where it was, and this is what happened. It went up and it got past the top line of my bear flag. So what can we do? We'll continue to buy it and see if it wants to go up to the Omni average. We'll check that out. So I was incorrect, and then in my last video I also pointed out crude oil. What I mentioned was that there was major resistance right up here in crude, and maybe it could get up there, but it probably won't get past that. Here's where it was. And this is where it sits now, traders. It never, ever got past this area yet. It went up, yes, from here to here, but it's stuck in this area where the resistance comes in. So until we get above the resistance, you still have to be quite cautious about the crude oil and the fact that it may fail. But we are cautious buyers of dips if we had to do anything there. We're not trading crude. Traders, let's go back to that Dow Jones Industrial Average chart. Let me explain to you why you have to be a very cautious buyer of dips. It's still in a big bear flag, a very big one. Look, it's still inside of that bear flag, And as of this video, it sits right here, not very far off the top of that flag. Is this flag going to fail? We are below OMNI Trading Academy's proprietary moving average. As you can see here, it failed. It held, and then finally failed. You've got your bear flag. Yes, we're buying dips, but we are cautious buyers of dips. Now, this is the very same chart that put the double bottom in for you, right? 1, 2, it's what I just showed you. I didn't think the double bottom would hold. Well, it did, and we're up to here. Very same chart. Here's another picture of the exact same chart. This is that same chart. You held your double bottom, but another reason why, I kid you not, we are not out of the woods yet. What do you see before your eyes? Left shoulder, head, right shoulder. We are merely in a huge head and shoulders in the right shoulder of that head and shoulders, and a massive flag being created. So are we in a flag still? It appears that we are. Is it the right shoulder of a massive head and shoulders? It appears that it is. Should we be a cautious buyer of dips? Absolutely, because if it gets up here somewhere, the failure may begin once again, and we may get our head and shoulders projection. So this is that same chart. You see we held Otapma 3 times, bang, 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 and then broke down through it. Put the bear flag in. Yes, that's a double bottom for now. It will be recorded in history as one, undoubtedly. But we are still in the bear flag in bigger context here. You need to be very, very careful, even though we will start the day off buying the dips in E-mini S&P. Traders, pull your own charts, do your own analysis, and remember, always have the bigger picture in mind when doing short-term technical analysis. So, traders, you've seen the charts. You've got my technical reason why we thought the market would never hold that double bottom, and why you still need to recognize that the market's not quite out of the woods yet. Yes, we're going to buy dips, but a cautious buyer of dips. It looks strong for now for day trading, but remember that big picture there, okay? All right, traders, so the last video I gave you, I was absolutely incorrect in thinking it would be a double bottom, and let me tell you something. I've got like 7 people who canceled the service. I had some jerks today writing me in my chat room. Oscar, you said it was not going to hold and it was going to go down and it went up. You know what? All you crybabies, kiss my ass, baby, as often as you can, every morning when you wake up. In fact, here it is again. Kiss my ass, you crybabies. I don't pull the goddamn triggers on your accounts. You stand there, you hit the buttons, so own up to your own goddamn trades. All I'm trying to do here is read analysis to you and do the best I possibly can to help teach you how to read these charts. If that's not enough for you, once again, kiss my ass and don't watch the videos anymore. The last thing I need are you crybabies showing up at my chat room and disturbing me during the day. So if you're going to play the blame game, hey, Oscar doesn't get it right every single call. Kiss my ass. That's what I'm going to tell you right now. To everybody else, come on down to livewithoscar.com. Come join me in my free trading room, and I'll help keep you in tune on most occasions with what should happen next in these markets. All right, traders, that's just about it. Remember, keep your emotions out of trading. One of the best things you can do to help keep your mind at bay. I mean, it is really, really difficult these days to figure out what to do with the markets. Then if you get that right, it's so hard to get in and out of these trades, and it's so hard to hold them because the volatility is whipping around. You're in profit, it's against you. You're back in profit, it's against you. What should I do? It's very difficult these days. I really get that. What you should do, number 1, is do your analysis and stick to your game plan. Number 2, come on down to livewithoscar.com. Number 3, say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. baby. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.